Okay, let's talk about the VWAP. That's the volume weighted average price. And look, this is not just another squiggly line you throw on a chart. For institutional traders, the big money, this thing is basically their compass for navigating the market. So today, we're going to pull back that curtain and show you exactly how they use it. You ever have this happen? I mean, seriously, you see a setup that looks absolutely perfect. You get in feeling confident, and then, bam, the market just spins around and goes right against you instantly. You might chalk it up to bad luck, but trust me, it's probably not random at all. What's really happening is that you've just wandered right into an institutional zone. A trap, really. These are the areas where the big players aren't just reacting to price. They're the ones making the price move, catching retail traders who just can't see the bigger picture. So what is their big secret? Well, while most of us are busy chasing candles and getting confused by a million different indicators, the institutions, they're anchor to the VWAP. It's their guide. It's how they build up massive positions at the best possible prices before they decide to make the market move.
So if we want to trade like them, we have to start by understanding their tools. Let's break down what the VWAP actually is, and more importantly, why it's so incredibly powerful. So, VWAP at its heart stands for Volume Weighted Average Price. Now, it's not just a simple average price. The key word here is volume. It's weighted by volume, which is a huge deal because it tells you the exact price level where the most money, the most shares, have actually changed hands. It shows you the true point of control. And really, its first job is just this simple. It's a compass. If the price is trading above that VWAP line, it tells you, hey, the buyers are generally in control right now. But if the price is below it, well, the sellers have the upper hand. It's our very first filter to figure out which way the market is leaning. Think of the VWAP as this moving area of value. So in a healthy uptrend, you'll see price come back, test it as support, and then launch higher. In a downtrend, it's the exact opposite. It acts as a ceiling, as resistance. And if you see a clean, powerful break right through it, that's a huge clue that the entire trend might be about to flip. All right, let's get into our first strategy. This is where we start building a real high probability setup. We're going to combine the VWAP with other things on the chart to find what I like to call reaction zones. But hold on. Before we go any further, I have to give you a huge warning. The single biggest mistake I see traders make is trying to use the VWAP all by itself. Look, it's a powerful tool, but its real magic is unlocked when you combine it with good old-fashioned price action. Trading it alone is just a recipe for disaster. Okay, here's the 5-step process. Super simple. First, find a clear trend. Second, you anchor your VWAP right to the start of that trend. Third, you mark out a key support or resistance zone. Now, step 4, this is where the magic happens. You wait for price to pull back to that sweet spot where the VWAP and your key zone overlap. But, and this is crucial, step 5, don't just jump in. You wait for the market to prove you right, to show you a reaction first. And that right there brings us to what might be the golden rule of trading. We are not in the business of predicting the future. We're not fortune tellers. We are in the business of reacting to what the market is doing right now. You have to wait for the proof, for that confirmation candle, before you put your hard-earned money on the line. Okay, so we found a really strong area on the chart. That's great. But how can we dial in our entry to be even more precise, to get the best possible risk-reward? That's where our second strategy comes into play. You know, asking this very question is what separates the consistently profitable traders from everyone else. Finding a good zone is half the battle, for sure. But timing that entry perfectly, that's what takes your trading to a whole new level. And the answer is found by looking at the market through a different lens. I absolutely love this idea. The market isn't just one flat picture. It's layered, like an onion, and each time frame tells a different part of the same story. What looks like a simple little pullback on your daily chart might be a full-blown, raging downtrend on the 1-hour chart. To be a great trader, you have to learn to read that story inside the story. So here's how you do it. Once you see price reacting at your high time frame zone, you immediately zoom in to a lower time frame. You'll see that pullback has its own little mini trend. Just draw a simple trend line across its peaks. The second price breaks that line, that's it. That's your sniper signal. It's the earliest, most confirmed entry you're going to get. All right, let's put all the pieces of the puzzle together now. We're going to combine these two strategies into one single, powerful framework. This is where it all really clicks. But first, you have to get this mindset right. The market does not care about your perfectly drawn lines. Price isn't always going to come down and tap the VWAP to the exact penny. You need to see it for what it is, a zone of value, an area.
Look for how price behaves around the line, not just on it.
So this right here breaks the entire system down. It's just 3 layers. Layer 1 is the VWAP itself. That's our market filter. Are we bullish or bearish? Simple. Layer 2 is adding our key zones. This boosts our probability because we're only interested when the VWAP lines up with a strong level. And finally, layer 3 is multi-timeframe analysis. That's what gives us that surgical, sniper-like precision on our entry. See, each layer builds on the one before it. So please remember this. We're not using the VWAP like a ruler to measure things with perfect precision. We're using it to feel the market's rhythm, its flow, and to understand the behavior of the big money that's actually driving the whole thing. It's about reading the rhythm, not just measuring a line.
So there you have it. You have now had a peek inside the institutional playbook. You get their compass, you understand the layers they use to plan and execute their trades. So the only real question left is, now that you know, where are you going to let it guide you?